Well, it's that time period yet again where every single YouTuber, every single news article are all talking about the next big drop or the next market crash. Now, obviously, no one can see when this is happening, and in my argument, we've already been going through an extended form of bear market, especially with small cap stocks, for a long time now. But I'm going to talk about it. I'm going to say what I'm dealing with or how I'm going to be dealing with the stock market crash, as well as some general pointers here. Like, as someone that is down a significant sum on their portfolio, surely you want to avoid the lessons or the mistakes that I've made so that you hopefully do better than I do. But as you know, at the moment, the general economy looks negative. The outlook is, oh no, it's going to be a deep recession in the next few years. Who cares? Because in 10 years' time, we could be prospering. We could be booming. The economy could be as strong as ever. But as usual, everyone fixates on the short term, fixates on the negativity, and obviously negativity sells, fear sells, and people obviously follow that. So they go, oh, this is the end of the world. All of these companies going bankrupt. So at the moment, what we're seeing is a lot of people are selling out of these typical equities that are seen as more growth, the ones that don't have proven cash flow runways yet, or for instance, are maybe struggling to make a profit in this time period. What they're doing is they're selling out of these and buying those that they deem of a higher quality, a better value with greater cash flow, bigger amounts of earnings, and more resilient. So we're seeing this move or this switch, and we've been seeing this for the last year and a half now, where people have been moving down the risk ladder. We're seeing interest rates rise. The rally in interest rates is obviously meaning that savings seem more valuable. Obviously, inflation is high at the moment. We're at about double digits, 10%, something like that. So £100 this year is the same as £110 next year. You'd have to spend that much money to get the same value of goods. So obviously, savings still aren't seen as that valuable, and it's kind of a place where people don't quite know where to put their money. So what they're doing is they're getting out of these higher risk growth stocks and they're going to the more reliable companies, the big companies, those big brand names. You're talking Costco, you're talking the big companies that aren't going anywhere anytime soon. And anyone else other than that, they're going to start to sell off. They're going to move their money away from that. Now, in my opinion, the best time to buy is when there's blood in the streets. And obviously that's not my original opinion, but that is what I follow. I, at the moment, believe that there is a significant amount of money that has left these growth stocks, and I do think there's a lot of opportunities and a lot of value around, as long as you're careful. And obviously, I have been far from careful in the past, so obviously it's down to really risk management, something that I have not taken as seriously before. But you're seeing a lot of these headlines anyway. Markets are dropping, stocks are crashing. Well, what are you going to do about it? Well, the first thing is don't panic. At the end of the day, you're probably going to be alive for the foreseeable future. You'll likely live through the recession depending on your age. At least in my situation, I'm in my 20s. Unless I get hit by a bus, come off the motorbike, or do something ridiculous that ends up getting me killed. Obviously, natural occurrences happen all the time. Don't get me wrong, I could be consuming too many energy drinks and I have a heart attack at the age of 24. We don't know this, but that's life. What I'm saying here is that at the moment, if you're watching this, a lot of you are typically in your 30s actually watching this channel. I do understand there are some that are of a higher age range. It's typical, or it's likely that you're going to make it through this recession. So there's no point worrying about individual daily movements. Instead, zone out, focus on other things. And you might go, well, you're just trying to avoid the problem by not looking at it. And okay, that's a very true thing, but it's no longer a problem unless you look at it. If you're saying, right, you know what, look, I'm going to read the company reports, I'm not going to look at the stock prices, and I'm just going to have an auto movement of my money every time I get paid into the stock market that automatically buys these stocks every, the 27th of every month, right? You're not going to worry about it. But then if you were reading the trading updates or the annual reports and you go, actually, yeah, London Stock Exchange Group here, I don't like this way this is going. I don't think their capital or their cash flow is high enough for the relative amount of capital expenditure they're making. I might look to sell here. And then you go and look at the stock price and go, okay, actually, yeah, this has been reflected in the share price. I'm going to sell out of this position, etc. There is more to the game than just stock prices, but people fixate on them. They go, well, Boohoo's fallen 85% in 5 years, therefore it must fall another 85%. I don't know. And don't get me wrong, you don't want to catch a falling knife, but it's not guaranteed. Nothing in this game is guaranteed, but what I do believe in is that if you continue to invest in quality companies over the longer term, it will go up, provided obviously that you've done your valid research. Now, the next thing that you'll need to do is create a shopping list. You want to know at least 5 to 10 companies that you're looking to buy and a good price target for them. For instance, you might have an absolute interest in Dunelm Group, right? Retailing furniture. Fantastic. You love that. You love the quality of their products. You like the way they've got cafes in their stores and the way that they're using secondary or warehouse style buildings to really build out and flesh out massive stores. You like the experience. You also feel that the company is critically undervalued, or perhaps maybe it's a just over fair value at the moment, you can't justify buying it. But if you've set a price target of £4 a share and it hits that, then it's good to have some capital available and to buy a little bit, poke a bit and open a position with it. If you have an abundance of options saying, okay, you've got 10 different stocks that you think are of equal quality and all have got different price targets relative to their fair valuation in your mind, then obviously you're not going to be diving on the first one you see to fall, because you'll be like, well, actually, yeah, Ozbourne Group is down 15% the last 2 weeks, but I've also got this stock here, let's say Ashton Group, which is down 10%. I actually think Ashton Group's a better value here, so I might chip a little bit into Ashton Group, a little bit into Ozbourne, and I'll see how things go. You see how you've got more of a balanced mindset and not making the mistake that I've made, where I've gotten so intensely focused on two companies being Just Games Workshop and Boohoo that obviously I'm not looking at anything else. I call it, it's two Iters or one Iters, which is another term used elsewhere, where you're solely fixated on one thing. In the case of men, it'd be like one woman, that you don't see any other women around you. Now, this is obviously typically a bad thing because you fixate so hard on that one, you don't see its faults. You're looking at it with rose-tinted goggles, and obviously that's not going to go very well either. So here we go. The first thing, obviously, is avoid the markets, avoid the fear, do other things. People forget the stock market is not their life. Do other things, do interesting stuff. I'm working out 5 times a week. I'm also going to a dojo once a week. I'm riding the motorcycle every time there's good weather and to the office. I've got hobbies that I'm now doing that keeps me occupied, keeps me distracted. YouTube is only one of the things that I'm doing. I'm also obviously working full time, 6 days a week. So obviously there are loads of things to keep me busy and away from the markets. I'm therefore less bothered about the volatility. And if we look at my portfolio performance at the moment, you'll see that I'm down 62.18% in 900 days. Now, I've had people all the time slating me, and it's like, well, obviously, I'm showing you my portfolio at the end of the day, and if I was lying to you right now, you wouldn't know. Point stands, I'm down 62%. And you might go, well, yeah, you don't care because you're a gambler, right? Or because you live with your parents, this money doesn't matter to you. Well, of course, it matters to me in some way, shape, or form. But I figured at this age, at my current stage in life, where I believe that I'm going to be investing in the stock market for the next couple of decades at least, I'm not as concerned with the volatility at the moment. I have no plans or interest to draw down on this capital in any way, shape, or form, even to buy a house. I don't care about that, to use it. So if I'm not going to use it in the short term, why would I care what the price is in the short term? Unless, of course, one of my businesses now of a lower quality, or they're going to go bust, which I don't believe is going to happen, not for a long shot. And you know what? Clip this bit. I don't think Boohoo is going bust based on their current fundamentals, right? I do not think they're going bust, and that's why I'm buying more. Now, in 5 years' time, you might go, well, yeah, actually, you're wrong. Boohoo's going bust in 3 to 4 years. Let's see who's right, because in 5 years' time, Boohoo could be a lot higher in price. And if that does happen, am I going to be humble or am I going to flex on you? I don't know. But we'll see, right? And that's part of the game. No one knows until it's happened. It's always easy in hindsight to win Monday's lottery with Tuesday's newspaper. It's very easy because you already know the numbers. It's easy to look back on that, right? The market crash is here. Everyone's making videos about it. Avoid the noise, do your own thing, and make sure that you're happy in life. Have a fantastic day.